All right, what's up, Tech? I'm super excited for today's video. We're going to be taking a look at ZM. Okay, this is Zoom, and this was a very big pandemic play. All right, and it's dropped dramatically since those pandemic highs. So we're going to be breaking it down. Okay, the main thing that I'm looking at on the chart that I see that really has my attention, all right, is we have some bullish divergence, okay, which you guys know I love charting up some bullish and showing you guys bullish divergence. And we have a nice chart pattern forming on the chart here, known as an inverse head and shoulders. We have our left shoulder, we have our head, we have our right shoulder here. There's a potential we could come all the way back up near 150, okay, if we get the full play out of this head and shoulders. All right, so I'm definitely going to be watching that, and I recommend you guys pay attention to that as well. All right, we'll go ahead and break it down, starting off with the bullish divergence. All right, and what that is it's meaning there's a divergence between the stock price and the relative strength index. Okay, that's the line that I've got here, the RSI. Okay, I just want to show y'all real quick that we have consistently been making lower lows on the price action. Okay, so the actual price of Zoom has been dropping, but we're creating higher lows on the RSI, the relative strength index. Now, what does this mean for traders, for us? Well, we can see that the relative strength is increasing as the price is dropping, right? This is presents you with a good opportunity for a possible day trade or swing trade, right? Based off of this bullish divergence. All right. My favorite thing to do is to connect the dots. All right. So, we have our ovals here signifying the low points, right? And then we have a trend line here signifying and connecting those low points on the chart with our relative strength index, right? And what it does is it gives us a nice little trend line. And you can see here today, we're bouncing right off of that trend line. Okay. So it's going to be really important to see, do we find support here and head back up along our bullish divergence trend line? Or if we break this trend line, all right, and stay lower, then the momentum could be gone, right? So it's a really nice way for us to gauge it. Okay. The main support and resistance levels that I'm going to be looking at is 97.46, 103.16, and 108.85. Those are, kind of like the key levels that we currently need to pay attention to, right? Now, we did get a pullback on Zoom. Just like a lot of stocks that I was looking at over the weekend, they all had gaps down to fill from last week, right? Now, why are these gaps important is because they fill 90 to 95% of the time historically in the stock market, okay? So what I mean by a gap is if you look from this candlestick to this candlestick, from the very high to the very low of this one, there's a gap in between there, all right? I like to highlight it in a nice bright blue box so it catches my eye, right, and set some alerts above and below these gaps so that you can be prepared for them to fill, right? So sure enough, we ended up pulling back today. It was a very red day in the market overall, you could say. But there is a little bit of hope. Okay, Google is performing well after hours, after earnings. Okay, and Google holds a very big weight in the market. All right. And we're just going to look to see if the market can recover, if we can hold 97.46 as support and keep that right shoulder of our inverse head and shoulders. Okay. Below 97.46, I would be cautious. Okay. It could head back down to 90.42. All right. And then we have this 103.16 level. We broke through that today. So that'll be a major resistance level now. We can go ahead and get rid of this box because our gap has been filled. All right. And then above there, we have 108.85. All right. So those are the main levels. And this is the chart pattern that I'm looking at. All right. We have our left shoulder, we have our head, we have our right shoulder forming right here. And we're just going to look to see if we can hold this 97.46 support level, like I said earlier, and ride the momentum up towards the top of the inverse head and shoulders play, which would take us up to 148, 150. All right. So it's a really hesitant time in the market right before FOMC. Okay, we have the rate hike tomorrow. We're going to get the official rate hike. And, just after this week, things are going to be a lot more clear, right? We're going to see how the market reacts to the rate hike, what it does to tech, specifically tech plays like Zoom, things like that, that have really been taking a beating this year. We'll see how the market reacts to those. And if it does react well, okay, we have a very nice bullish setup currently on Zoom to pay attention to. All right. So thank you guys for watching. If you want to see your stock in the next video, make sure to comment below and let me know, okay? Because I do viewer requests every single week. So I can chart up a stock for you, a crypto, maybe a strategy or tutorial, anything like that. All right. So appreciate you watching, and I'm out.